Good afternoon and welcome to your weekly FX options report. Today is Wednesday, December 15, 2010. In midweek trade, the latest U.S. economic data releases and ongoing sovereign debt concerns in the Eurozone weighed on overall market sentiment. Starting out with the look at the Eurozone, Spain's debt rating came under review by Moody's. Now, Spain's AA1 rating may be downgraded amidst debt issues and possible funding programs going into 2011. And at the end of the Fed meeting on Tuesday in the U.S., the central bank reaffirmed commitment to purchase $600 billion in bonds to lift the economy. There was no change in monetary policy as had been widely expected. And on Wednesday, in terms of U.S. economic data releases, CPI rose by 0.1%, while the core inflation figure climbed by 0.1%. And the New York Fed's Empire State Manufacturing Index for the latest month improved to 10.6 in December from minus 11.14. And tech data showed that foreign investors purchased $27.6 billion in U.S. assets, long-term assets, in October from the $77.2 billion in the prior month. Meanwhile, the NHB's Housing Market Index remained unchanged in December. And taking a look at the spot FX market, the U.S. dollar is trading higher against the majors of the euro, pound, and the yen. And the euro did continue to see pressure based on concerns about Spain's possible downgrade by Moody's. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. And for more information, you can go to www.fxoptions.com. Now, taking a closer look at the major IC FX option pairs, starting out with the AUX, let's move on to our daily technical report. Now, the AUX is the U.S. currency against the Australian dollar. For that pair, the bullish bias is above the 98.25 level. The RSI for the AUX currently lacks downward momentum, and therefore the preference of trading central analysts is long positions above 98.25, with targets coming in at 105 and 107 in extension. For the BPX, the U.S. currency against the British pound, a rebound is expected. The pair has rebounded on its support and should reach its next resistance as the RSI is well directed. The preference of trading central analysts for the BPX is long positions above 62.50, with targets coming in at 65.50 and 67.50 in extension. For the CDD, the U.S. currency against the Canadian dollar, rebound is in sight. Technical indicators are losing downward momentum, and the preference of trading central analysts for that pair is long positions above 99.50, with targets coming in at 105 and 108.35 in extension. And moving on to the EUI, the U.S. currency against the euro, a rebound is expected. That pair has rebounded on its new support, and the RSI is well directed. Therefore, the preference of trading central analysts for the EUI is long positions above 74, with targets coming in at 77.50 and 79 in extension. Moving on to the SFC, the U.S. dollar against the Swiss franc, the intraday support currently comes in around the 97 level. It has struck against its resistance and is currently pulling back on its new support. Therefore, the preference of trading central analysts for the SFC's long positions above 97, with targets coming in at 100.50 and 102.50 in extension. Last but not least, looking at the YUK, the U.S. currency against the Japanese yen, caution is advised. Now, that pair has rebounded on its support, and the RSI is currently mixed to bullish. Therefore, the preference of trading central analysts for the YUK is long positions above 82.45, with targets coming in at 86.30 and 89 in extension. And now let's move on to our weekly trend opinion. Last week we saw that the U.S. dollar regained some of its strength against the major currencies. But since the beginning of this week, it did lose a little bit of its momentum. And regarding portfolio performance, since its inception in August of 2007, it is higher by 1,878.46%. And since the beginning of this year, January 2010, it is higher by 598.36%. We do have one trade alert for you here, and it is to consider calls on the YUK, the US dollar, against the Japanese yen. Now, that pair has rebounded on its support and is expected to post a further up move. And the daily RSI is also well directed for that pair. And as year-end approaches, with 2010 nearly drawing to a close, the outlook on the currencies, especially the major currency pairs, is being blurred. Therefore, we're seeing choppiness, and trading central analysts will continue to keep a closer eye on the BPX as well as the EUI. Now, looking ahead to next week, trading central analysts will be looking at the following currencies, including the CDD, the AUX, the PZO, and the NZD. Now, Trading Central will be looking at the CDD because it is currently still challenging its support, and that does stand at the 99.50 level. And for the AUX, it is pulling back on its support or previous low at the 98.25 level. And for the PZO, has rebounded on its support, challenging its new resistance at the 126.50 level. For the NZD, it is currently on the upside and approaching resistance at 136. Now, they are also looking at the SKA because it has struck against its resistance, and it is also pulling back on its support at the 67.50 level. And that does wrap it up for today's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching, and have a great day.